else when you can just present them. So the moral of the story is break out the costs so that the allocating agency can clearly understand the entire picture, even if all of these costs are not included in eligible basis.
Yeah, basically you want to avoid the delay and back and forth with supplying documentation to the state agency and trying to get those 8609s in play, which is what I briefly brought up, Colin, about before. You don't want to delay the process and,
yep.
and missing that tax return deadline.
Be as transparent as possible here. Okay, so moving on to page 818. Now, that pages 815 through 826 discuss the inclusion of development fees and eligible basis. So this is obviously a big issue for the IRS. The IRS is basically looking at several issues when considering development fees. The characters of the services to be provided, are they for eligible items? The services actually provided, the reasonableness of the fee amount, and the method of payment. Page 818 shows examples of the services that may be mentioned in a development services agreement, but are not includable on an eligible basis. Item 1 discusses the acquisition costs, which are generally ineligible unless there is an acquisition credit, in which case a portion of the purchase price may be eligible. Some may be allocated to land and some to the building to be rehabbed. Item 2 indicates that maintaining contracts, books, and records is not an eligible service.